Hey everybody, it's Sunday, June 24th, 2018, taking a look at the S&P 500 as we start June week 5, final week for the month, final week for the quarter, final week for the first half of 2018. A lot of finals coming up this week. Catalyst this week also will be CCAR results at Thursday after the bell. Could be a bullish catalyst, but I can tell you that on Thursday of this week, as we awaited the bank stress test results, that was anything but a bullish day, and on Friday was an absolute nothingness day of nothing. So the bank stress tests did nothing for us on the upside, but maybe the CCAR results will be different. I don't know. We will see. But let's just take a look at what happened this past week and how to be positioned for it as we go into the week ahead of us. Here is the S&P 500 chart going back to the start of our leg of the rally that we're in, which started on May 3rd, which took us up to the first half of the rally at 27.42. Did a video last week about the whole first half of 2018, explaining the importance of the 27.42 level. Please watch that video if you haven't yet. It'll be the one previous to this video on my YouTube channel, and I tried to retweet it a few times during the week. So if you watched some other video from me already once this week, then you have seen that video, and you already know about this 27.42 level. But in any case, on June 1st, we had a nice little rally that was on a Friday, but we were still parked underneath this 27.42 level. And then on Monday, second trading day for June, we came in and gapped up open on the 27.42 level. Took off from there, putting in our final 50 points on up to 27.91.5. And from there, we have sort of rolled over ever since. On June 1st, we saw the 50-day flatten and begin to tick up. And I believe that this is what was the real catalyst below the rally, because look at this now. Look at where the halfway back for the whole quarter is now at this point. It is right there where the 50-day was on June 1st when this last leg, this last portion of the leg of the rally started. So from this high, 27.91.5, down to the low for the quarter, which printed on the very first trading day of Q2, halfway back of the whole rally for the quarter would be down here at 26.72. And now that intermingles with this 529 low, and you can see that our 200-day simple moving average is rising up, and maybe by the end of this week, or as we approach CCAR, the 200-day simple moving average is going to be right up in here as well too. The reason why I'm talking about this is that I see this as our likely target if we break 27.42 going into the week. If we break it early, I think we have plenty of time to trade all the way on down here to this 26.70 to 26.80 handle. And that also rhymes a lot with our 80 handle rule, because up here we got to 27.91. We can call that a fail of 2,800. Then this inability all week to trade above 27.75, we can call that a fail of the 80 handle, the 27.80 handle. And we traded on down, all the way down, and had all of our closes at around 27.50. Our lowest close on the week was 27.49.76. So there is your, break 80, go to 60, break 60, go to 50. And then if we're gonna trade down and break this 27.42 level, I think then we've got to be prepared then for 2700, 26.80, 26.60. So somewhere between 26.80 and 26.60 would get us to this target down here. We would have to break the 50-day and the 100-day to get here, but in any case, it's all going to start here at 27.42. If we toe the line and hold 27.42, we're good to go. Maybe we're just going to sit and stagnate between 42 and 75 once again this week, waiting on those CCAR results, and then maybe we'll have an opposite reaction after that happens and go up. I don't know, but we've got some clear lines in the sand drawn here for us on the underside at 27.42. Well, let's get into the nitty-gritty now about what could happen, especially if anybody has held any options over the weekend. Okay, our close on Friday was underneath the 20-day simple moving average. Unfortunately, the 20-day simple moving average sat on the 55 strike on Friday, and this level did not break until the final few minutes of the day, like literally the final 5 minutes. So it might have just been collateral damage trying to pin the 55 strike, and so therefore they pushed down below it and did not bring it back above for the close. And maybe that is just an unfortunate accident and a necessary thing that had to happen, and it ended up just being that we closed below the 20-day. If it was intentionally done to send a message, then we're gonna open up, we're gonna head lower, and we know we're in trouble when we break 27.42, and then that whole scenario I just laid out will start to take place. If we come in and if we gap up open in any way, shape, or form, and start to fill that gap to the close is going to be right underneath the 20-day, and then if we fall and roll over from there, we need to have our eyes on 27.42 and a break of that. Okay, if we come in and we gap up open, our first line in the sand to the upside is going to be taking out Friday's high. Sellers sitting on 65 Friday. 64 was our high for the day. Couldn't get out over that. If we get out above Friday's high, we'll have our 10-day simple moving average kind of moving down to like 27.68, 69. Well, here on Wednesday and Thursday, that was the open both days. If we're going to move to the upside, we've got to take out 27.69, and we've got to move through 27.75. There was not a day that we traded 27.75 last week. Our high was on Monday, 27.74.99. So we need to take out the 10-day and then confirm it with a move above 27.75. Above 27.75, the market is not a short anymore. It is long, because we're going to be going after 27.80. We're going to be going after filling this gap to Friday, week 3's close, and taking out this high of that day. These are levels that are already on the roadmap. I just want to fill you in on the details of how we get there based on what happened last week in a more detailed manner than I can post on the roadmap. Okay, so bullishly, we want to see 27. We want to see Friday's high go down. We want to see the 69 level go down, and then our final confirmation of the upside is 27.75. We don't want to be in puts anymore, straight directional puts anymore above 75, because we could be going all the way to 91.50 and possibly up into the 2800s. So blue box up here is our target on the upside, having to get through Friday's high, 27.69, 27.75, and then boom, try and make our move back to 2800 again. If we come in and break this 20-day once again, break below Friday's low, I think it's safe to say that below Friday's low, I don't see why we would set a triple bottom here. You never really get those. Would be a miracle if it does hold, but so be it. I think, though, what we're going to end up pushing down through 27.42, and at minimum fill this gap to 6.1. If we move lower than filling this gap to 6.1, then we have the low for the month, and what's that saying? We'll have given back the entire month of June at that point, and testing the 50-day, and maybe we sit and think about it for a couple days, and then begin that final descent down to the 26.70s. Okay, so I hope that was all clear. Hope I didn't go back and forth too much. Anyway, enjoy the rest of your weekend. If you have any questions, just send me a DM, and I will answer it back as quickly as possible. Good luck and good trading.